look at the agenda. I need approval of the agenda. Who supports? Support Nancy. Any discussion or questions? Roll call. Madam Chair. Yes. President Maxson. Trustee Richardson. Yes. Yes, and Member Pass. Okay. Do we have any public comments?
No.
All right, then we'll have the audit presentation.
Good afternoon, Madam Chair. Is there a way I can share my screen?
Yeah.
What is going on now?
He's trying to share his screen. There you go.
Share the screen?
Yeah, share his screen, yeah.
So everybody can see the screen?
Yes.
Yes.
Okay. So good afternoon, good evening. This is happy to be able to present to you the results of our audit. So what I'm going through right now is just the PowerPoint is going to give you an overview, and then I'll kind of walk you through the actual audited statements. So in the audit overview, it just indicates that our responsibilities was to perform an audit of the financial statements of Pontiac Public Library for the year ended June 30, 2021, in accordance with generally accepted auditing standards. The objective of our audit is to obtain reasonable but not absolute assurance that the financial statements are free of material misstatement. Plan, scope, and time of the audit. We provided an engagement letter that outlined the scope of our audit, which was dated May 26, 2021. And we've issued or plan to issue an unmodified or clean opinion on the June 30, 2021 financial statements. The results of our audit were reviewed with Pontiac Public Library management, both admin and Vincent Harden. We noted no transactions entered into by the library during the year that lacked any authoritative guidance or consensus. We encountered no significant difficulties in dealing with management and performing and completing our audit. We had no significant adjustments to the audit, to the accounting records in order to make the financial statements fairly presented. We're pleased to say we didn't have any disagreements with management. We got good cooperation. There was a bit of turnover this year versus last year. So the audit, we had some challenges in terms of retrieving certain documents and getting information, but we were able to get everything done. And that's one reason we had somewhat of a little delay in terms of presenting to you at the regularly scheduled board meeting. At the end of the audit, we always request a management representation letter, which is a written representation from management that basically they provide us everything we requested during the audit, haven't withheld any information that could impact the financial statements or require some type of disclosure in the financial statements. As far as we know, and to our knowledge, there was no disputes that caused management to go out and get a second opinion from another CPA firm. And no conditions were placed upon us as part of our audit to be retained to do the audit for the 2021 year. There was a couple areas that we believe warrant some consideration by management. One is during the audit, we had some difficulties in some cases of management obtaining or locating certain documents supporting certain transactions, or maybe an invoice from a particular vendor, things like that. And so I think part of it is because of just the overall turnover we've had in the department, in the library, and but we think, you know, that we need to make sure that we're able to locate documents supporting transactions, either a physical document that might be stored in a file cabinet, or electronic document that might be scanned or stored electronically, so that we always have support for all of the transactions of the library. The other one was in the property tax payments area. This one is really kind of what caused us not to be able to be ready for the regular board meeting. There's payments that come in both electronically and also in paper form. And the accountant is not always, or Vince Harden has not always been the recipient of the receipts that support all of the deposits. You know, some come in with very little detail in terms of electronic deposits, and then other things that come in the mail. In some cases, the backup for those were not being able to be located or forwarded to the accountant. So we had questions of trying to reconcile the property tax amounts to what we received eventually from the city treasurer. And then we later found out that the amount was proper, but it was an amount that we actually got directly from the county that didn't come from the treasurer, but the accountant didn't have, Vince Harden didn't have the backup for it. He you know, was recorded properly, but he couldn't provide us with the support that said, hey, this came from the county and it represents property taxes. So we were able to get all that resolved, but we just need to make sure on an ongoing basis that all of the support for deposits gets forwarded to the accountant, so he's sure exactly where he's recording and we have the backup in our files, so when the audit's done, that can be provided to the auditors. Next few slides is just a summary of our assets comparing 2020 to 2021. In 2020, our total assets was about 767,000. It's pretty comparable in 2021. It's about 763,000. You know, most of that it basically represents cash. This year, about 657,000. Last year, about almost 640,000. And then we had some receivables or due from other governmental units. This year, about 105. Last year, about 126,000. And that's basically dollars that are due from the state of Michigan that we hadn't received yet at the end of the year. Liability side, last year in 2020, our total liabilities, are what we owed out to vendors, or we had, you know, accruals for accrued liabilities, was about 20,744. This year, we have a lot less than that. We have about 2,824. Fund balance is basically the difference between our assets and our liabilities. In 2020, we had about 746,000. It was our fund balance. This year, it improved by about 14,000. Is up to about 760,000, almost 761,000. And we have basically, we've still got $500,000 that the board has assigned, or has some restrictions on the use. It has to be approved by the board before we use any of this $500,000 have been set aside. And then the unassigned amount or unrestricted amounts this year is about 260,000 versus about 246,000 in the prior year. In terms of revenues, in 2020, we had about 971,000 in overall revenue and support. This year is about 991,000. Again, the biggest chunk of our revenue is basically property taxes. In the prior year is about 712,000 roughly, and this year is close to about 730,000. And then we had our basically our monies from penal fines that we get from the state of Michigan. It's up this year about 231,000 this year, about 150,000 last year. We had a small amount of grants, I think both years, about 20,000 this year and about 25,000 in the prior year. 20,000 this year, I guess. No, actually 63,000 in the prior year. Then we had some fines and forfeitures in the prior year, about 25,000. This year is a lot smaller, about $3,800. Then a summary of the expenditures. In the prior year, our total expenditures were about $1,007,000. This year, it's gone down. We spent about $977,000 in terms of our expenditures. Again, most of our costs relate to salaries and fringes. In the prior year, about $547,000. This year, less because I think their staffing cost was less this year, about $471,000. And then we have our other occupancy cost and basically our contract services and our occupancy costs make up the majority of the balance of those amounts. And then our debt service, we do have some debt we're paying on in terms of some of the finance additions that we had. I think in the prior year, the debt service was about $40,891. This year is about $47,802. And we had capital outlay to our books and books and things that we capitalized. In the prior year is about 78,000. This year about 74,000. So pretty comparable. So when we look at our change in our fund balance in the prior year, we used some of our fund balance to fund operations in 2020 to the tune of about 36,000. This year we had basically a surplus, which increased our fund balance by about $14,382. So from an operating standpoint, we had a pretty significant improvement overall in our operating results this year versus last year. So I'm gonna stop here, but I'm gonna bring up the financials statements so you'll see what we need you to look at and approve. Stop sharing for a second, and I'll bring up the financial statements. Okay, I'm gonna go back to the beginning here. All right, so sorry about that at the beginning, but this is the draft of the financial statements that we need approval, needs to be submitted to the state of Michigan by December 31st. I'm not gonna go through every page. I'm gonna kind of I'll kind of tell you about what each part of it is from the table of contents. The first two pages is our independent auditor's report, and that's our report on the financial statements. And again, we plan on issuing what we call a clean or unmodified opinion on the financial statements. The next section is the management discussion analysis, and that is just management's ability to basically summarize and kind of describe the contents of the overall financial report. After that, we have what we call the basic financial statements. And there's really, inside of that, there's really two sets of financial statements. One we call the government-wide financial statements. And those statements are done on what we call the accrual basis of accounting. And on those statements, we show the cost of our assets, less depreciation, and we show any debt related to financing or assets that we've purchased on terms where we have actually an installment agreement to pay off the balance that we borrowed to acquire those assets. And then we have the fund financial statements. And these are the statements that the state basically really looks at. And this is the statements where we basically we do our budget every year. We budget for what we're going to spend in terms of revenues and expenditures and the like. And so those are the fund financial statements. And then accompanying the financial statements is the notes to the financial statements. And the purpose of the notes is really to give the readers of the financial statements more information as to, what the financial statements represent. If there's any specific accounts that need further explanation, that is included in the notes to the financial statements. And then in the budgetary supplementary information is our budgetary comparison schedule. And what we do here is we look at what the budget was that was approved by the board. We look at what the actual revenues and expenses were, and we compare that to what was budgeted and show what the variances were. And then the last report is our internal independent audit report on internal control over financial reporting compliance. And there, our purpose there is to really look at kind of internal controls overall to see if whether or not there's any what we call significant deficiencies or material weaknesses in terms of internal controls that could have a significant impact on the financial statements. And we also look at whether or not the library complied with any significant laws or grant requirements or other regulations. And that report is on page 24 and 25. So I'm going to kind of briefly go through the next two pages. Again, is our independent audit report. Again, we talk about our audit of the financial statements for the year ended June 30, 2021. We talk about responsibilities. Responsibilities with respect to the financial statements is that of management in terms of maintaining the books, records, maintaining good controls, and also ensuring that the financial statements are fairly presented in all material respects. Our responsibility is to audit the financial statements in accordance with the generally accepted auditing standards. And there we look at kind of the process procedures, we assess risk, and we tailor our approach to basically try to look at where are the largest risk or the major risk of misstatement in terms of the financial statements. And then we perform our audit procedures accordingly. We try to do as much third-party verification as we can. So we typically will confirm banks, we'll send out a letter to the attorneys confirming any kind of legal matters. We'll basically, if there's any long-term debt with the banks or financial institutions, we typically confirm that. And then we look at support on a test basis, on a sample basis, support for transactions that are reported in the books or records. And so in the next page, we talk about our opinion. In our opinion, the financial statements referred to above present fairly in all material respects. Basically, the financial position, the results of operations of the library as of and for the year ended June 30, 2021, in accordance with generally accepted accounting principles in the United States of America. The other matters refer to basically the management discussion analysis and the budgetary schedules, because those are supplementary information, but we don't necessarily audit all the numbers individually and report on them, but we do make sure that those numbers agree with the underlying financial statements. And then the last section is basically reference to that report I mentioned to you on internal control over financial reporting and compliance. The next pages is our management discussion analysis. I'm not going to go through in detail, but it talks about the financial reporting, and gives some financial highlights in terms of for the year. Use of the report, it kind of describes these different financial statements that I talked about, the government-wide and the fund financial statements. It gives a summary of the library as a whole in terms of the assets, liabilities, this year versus last year. The revenues and expenses this year versus last year. And then it talks about a little bit about the overall revenues, where they were from a government standpoint. So this year, our total revenues was $991,000 versus about $971,000 the prior year. And then we talk about the library's fund, the $500,000 that the board has designated for future building and capital improvement needs. What our expenditures were. budgetary highlights, it shows that our actual expenditures were about 246,000 less than what we budgeted, and our actual revenues were about 218,000 less than we budgeted. So we were under, we didn't hit where we wanted to be in terms of actual revenues, but we were way under in terms of what our actual budget expenditures were. Capital assets kind of talks about what's included in our capital assets being our library books, our building improvements, furniture and equipment. And then the debt, we had some debt we issued back in 2018. It was $138,000 to finance the purchase of certain building improvements. Most of that debt has been paid off, but we talk about it in note 5 to the financial statements. And economic factors, we don't expect to have any significant increases or decreases in terms of our revenues moving forward into the next fiscal year. This statement is a statement of net position, and this one is basically what we call an accrual basis. This is the first set of statements. And so the big difference between this statement and the fund financial statements is we have assets on here subject to depreciation of about $657,000. And the other part is we have a current long-term portion of our debt that's still outstanding of $30,054 that related to the money we borrowed to make those building improvements. So in this statement, our net position overall is about $1,388,394 at the end of the year. Statement of activities, which I'm not going to go through a lot, but it basically shows what our expenses are, what our charges for services were, what our net expenses after applying those charges, and what our general revenues were to get to, which was about $988,000. So our general revenues exceeded our expenses up here by $101,000. So it gets us from a net position of prior year of $1,286,000 to $1,388,000 at the end of the year, which is the same number that appeared on the previous statement. This one is a balance sheet. This is kind of what the state looks at. The only difference between this statement and the other one is on this statement, we don't show the capital assets and we don't show the debt related to what we borrowed to make those building improvements. So our total assets is about $763,000. Our liabilities about $2,824. And then our fund balance is $760,945. Again, $500,000 being assigned or restricted by the board for future capital improvements. This schedule is just a reconciliation. There's two different sets of statements, so it reconciles between the 76945, which is our fund balance on the balance sheet, to the net position on the other set of statements, which is $1,388,394. And so it just shows you we have total cost of our capital additions was at $1,471,000. We appreciated those to the tune of $813,808, and then we don't show the long-term debt. We still have some debt outstanding on what we borrowed of $30,054 at the end of June of 2021. This one is our statement of revenues and expenses. This statement, the revenue section is going to differ a little bit from what we sent you. Today we've got more information in terms of some of the revenue. The total change didn't change. It's still $991,857, but the classification we've shown more up in intergovernmental and then less in other revenue. So the total is basically $991,857, which is what you have in the draft that we sent out yesterday. The expenditures pretty much is kind of what I described in the PowerPoint. It kind of goes through the salaries and wages, about $372,000, fringes about $99,000, utility supplies. Another big expense would be contract services, repairs and maintenance. And then the general government expenses, 855,000, our capital outlay, 74,128, and our debt service costs, 47,802. So our total expenditures was the 977,475. And as I mentioned earlier, we had an operating surplus this year, which increased our fund balance by 14,382 to get us to an ending fund balance of 760,945. And then this schedule basically is just to reconcile between the two statements. The change in fund balance was 14,382 here. It was 101,532 on the other set of statements. And it just gives the effect of what caused, how we reconcile between the two. Because capital outlay, depreciation, things are reported on the other statements and not on these statements. Next few pages are our notes to the financial statements. Again, it's just a general description of the reporting entity. Talks about the different types of statements as I kind of described. Talks about our property tax revenues and kind of what those numbers look like. Description of our assets, liabilities, and net position. Capital assets, we do, on the one set of statements, we do record capital assets and we depreciate those over the estimated useful lives of those improvements based upon what our policy is for the library. The only thing here in the fund equity, we do talk about assigned. We do have a assigned fund balance amount of 500,000. And that's assigned based upon the intent to spend resources on specific purposes expressed by the governing body. And so that's kind of what this body has done. We've restricted $500,000 that has to be approved for any usage for future building repairs or purchases. Deposits and investments. Here we basically we talk about, we make sure that what we do in terms of our investments or our banking is consistent with the state laws, and then we do disclose whether or not any amounts were not insured by FDIC. So this is normal. Typically, FDIC will insure up to about 250,000. So we do have an amount. Our bank balance at the end of the year was 723,000. Roughly, and about 473,000 wasn't insured by FDIC. And that's not something that you have to worry about. It's required disclosure, but you bank with with solid banks, so there's no concern with respect to risk, even though some years ago there was some banks that went under and there was some issues with banks, but that's not the current state of the financial industry right now. Capital assets, again, this is the schedule of all the capital assets that we had in terms of categories: building improvements, equipment, furniture and fixtures, library books, the additions we had to those accounts during the year, the ending balance, and then the accumulated depreciation. This is kind of how much we've depreciated as of the beginning of the year. We've added depreciation expense to the tune of about 22,000. So at the end of the year, our total accumulated depreciation was 813,000. The net capital asset balance at the end of the year was 657,503. Risk management, we talked a little bit about that. We participate in the Michigan Municipal League, which is a pool that covers certain claims that for workers' comp and other things that we may incur liability for. Long-term debt, again, that's the balance of that $138,000 we borrowed. We'll be paying that off in 2022. The balance is about $30,054. This requirement came about a couple years ago. There's, we don't get, certain taxes that are levied are captured. And we've got some taxes within our district that are captured for the TIFA, Tax Increment Finance Authority. So That's about 114,879 for the year ended June 30, 2021. Subsequent events, we didn't have anything that we noted that happened after June 30 that we felt that required disclosure in the financial statements. COVID-19 is a required disclosure because everybody's still being impacted by COVID-19. It hasn't gone away, so it's a kind of required disclosure that we have to put in all financial statements just to make the reader aware that, hey, it does exist. If nobody really realized it does exist, we're required to include it. Budgetary comparison schedule. Again, we show the original budget. If there was any changes to the budget, we would put the final budget in here, and then we compare the final amounts to the actual amounts. We're going to make a small change to this. Still want you guys to approve with the change. The total's not going to change, but other revenue, that number is going to change. And then the penal fines, that number should be 231,144. So there's an amount of other revenue that needs to be moved up. We moved it up in the other statements, but we need to move it up on this schedule. So that's the only change there. Everything else is comparable, and you can see that overall we budgeted about 1,210,000 in terms of total revenues. We came in about 991,000, and so we were under about 218,000. In terms of general government, we underspent by 206, and in terms of our capital outlay, we budgeted 114,000. We came in at about 74,000, so we were under budget there. Our debt service was exactly what we anticipated, so that amount was consistent. And so we even though we were under revenues by 218, we underspent by about 246,000. So we still ended the year with a surplus of 14,382 for the year. This is just a description of the budget process, and we didn't have any issues in terms of any violations of the state budgetary accounting and budgetary act to be disclosed. The last two pages are, again, our report on internal control over finance reporting. We didn't have any significant deficiencies or material weaknesses. We did point out a couple of things during my presentation. We talked about the maintenance of documents. There were some documents they weren't able to locate, and then some issues that we think that related to the property tax deposit receipts. But those are areas that don't really cause us, they cause us issues in terms of getting support, but don't necessarily result in a material misstatement of the financial statements. And so we didn't report those as a significant deficiency or a material weakness. So that is my report. I should say our report, because Amy Lynn is on the call too, and Amy was responsible for performing the detailed work with respect to the audit this year and in the prior year.
Okay, does anyone have some questions or concerns you want to raise at this time? Yes, Rosie.
Okay, Madam Chair, on page 22, you said
20 what?
page 22. 22. In reference to the change amount that you have. And so we can just, if we decide to vote on this, then you're saying that we're going to get an updated copy that reflects the 31,000.
Oh yeah, absolutely. I'll send it. We'll send it as soon as we get off the call. It'll go to everybody. Yep. But yeah, the change here is the penal fines will be that number will be 231,144, and the difference it'll come out of the other revenue account.
Yeah.
Okay, in respect to the $400,000 that's uninsured, restricted amount of $500,000 that's approved by the board. Would your recommendation be, or is that something we would do about our investment being that amount as opposed to the $500,000 we normally set aside for that?
Okay, because somebody repeat that. I didn't get, it was a little choppy, so.
$500,000 that's restricted.
Mm-hmm.
And you indicated that there's $400 something thousand that's not insured. And my question is, do you recommend, or should we have a conversation with Mr. Harden regarding that amount being invested as opposed to the $500,000, the $473,454? Is that amount that's uninsured? Is that the amount that you would recommend that we invest, or should we continue looking at the investment for the $500,000?
No, I think, I mean, that's just I mean, the uninsured amount that happens. That's just a result of just what we have in the account and then what's being covered by FDIC. I think you've got to, get with, with an accountant and management to look at kind of what our cash flow requirements are. And then whatever that excess amount is that we have, I would look to make sure we invest that. But I wouldn't just use that uninsured amount as a measure of what we invest. You got to look at kind of what your cash flow requirements to operate are on a monthly basis, and then we have excess cash above that. Just look at kind of what makes sense in terms of investing that cash.
Anything else, Rosie? Anyone else have a question or concern they want to raise at this time? Mm-hmm. Look at the what? Mm-hmm. What's the question? What's your question to
the penalties and the fines? Explain like in 2020, 2021, it seemed to go up and increase. Do I have the opposite? Yeah.
Mr. Lon?
No, he's right there.
Hello.
No, I see him, but what about the, who's talking?
Nobody?
I asked about the penalties.
I know, yeah, and then I thought I heard a female voice. Can you respond to his question?
Well, I didn't hear it. Can somebody repeat it for me?
This question was why the grievance was made in 2021.
Why was what now? Still couldn't hear.
That have increased between 2020 and 2021. Can you elaborate why it has increased?
Why?
Yes, that's what he wants to know.
I can't hear it either.
Can I make it down?
I couldn't hear what the question was clearly. I'm sorry.
2020, there was a lower amount of revenue that was acquired, okay? In 2021, it increased. Am I correct?
Yes, that's what he wants.
For the penalties.
No, I went to the penalties.
If I could address that. This is Vincent Harden, the accountant.
Yes.
Yeah, and that's totally controlled by the county, and so we have no input into what that amount is going to be.
May I comment?
Yes.
Vince?
Yes,
May I comment? Mrs. Rosen?
yes. Go
Okay.
ahead.
Remember in 2020, 2021, the number of people that were traveling, in terms of penalties and fines, you had less people that were traveling and getting tickets and so forth. So you're gonna have a lesser amount, and you have more people traveling in 21. So you had more people getting tickets and fines, and that was divided up into, what is it, 21, 27 libraries in the county. So you're gonna have those fines increase after the COVID, where people were traveling.
Okay. Yeah, I just don't have any input on it because we're not involved in the calculation, nor had I sought to find out what they base their calculation on.
Like I said, it has to do with penalties and fines for people getting tickets and so forth. And if you get fewer people traveling in their cars because of the restriction of being able to drive in the lockdown and so forth, you're going to have a less amount of people getting tickets and fines. Where you had more travel in 21 than you did in 20. Okay.
Mhm.
That makes sense?
That makes sense.
Okay.
20. Okay. That makes sense.
Is that it, Nancy? Now,
I'm talking about this.
all right, have to have a motion.
That was my motion.
Okay, support, she did two things. She called for a vote,
I'm sorry, I didn't call for a
and
motion.
then
I meant to say, I make the motion to approve the
audit report.
about the report.
Okay, is there support to the motion? That's the support. Is there a discussion on the questions? Yes, Rose.
Madam Chair, one of the things that I stated was that he was going to make a change,
Right,
and that we amend the motion that it would reflect the change of the amount that he is going to show in the actual report that he submits.
Okay.
So that's the only discussion that we have, that perhaps we
and
amend.
you making a motion to,
No, I can't make a
Amend.
motion. There's a motion on the floor.
I know, but you can make a motion to amend. It's my understanding. And she would just, as long as she accepts your amendment.
I accept that you want to make the motion, but once you put the $2,081,000, $140 into the that's about since I transfer it's that
You support it?
yes, I support.
Okay, any other discussion? I guess we vote on the amendment first.
Yes.
Roll call
Madam
on the
Chair.
amendment.
Madam Chair.
Yes.
Trustee Richardson. Treasurer Master.
Yes.
Yes, approved.
Okay, now on the full motion.
Trustee Richardson.
We just voted on that amendment.
Vote on the amendment.
Now I gotta vote on the motion as amended. And she called for your vote.
Yes.
Chairman.
Yes.
Trustee Master.
Yes.
Yes, it was approved. Thank you.
Okay. All right, well, that's all. Thank you so very much.
Happy holiday.
Thank you.
Happy holidays.
Blessed holiday to you.
Have a nice holiday.
All right.
Safe travels.
And your future be bright.
All right, thank you very much. Good evening.
Yeah.
Okay, this is not on the agenda, but this is Max's last meeting with us. And we have a little token for you in honor of the service that you have given You still serving. Oh, we gotta get Max's box too.
Oh.
If you don't want to,
Don't listen to this.
I got one.
That's nice.
I got four.
Oh, you did
I have four. That is
classy.
That's classic.
They like you, huh?
What about you to do? This is really classic. This is classic.
That was nice.
It's beautiful.
It is. You gonna do one?
Okay, I'll entertain a motion for adjournment.
I make a support.
You
Make a motion. I make the motion, listen, I'm confused. I make the motion to adjourn, this meeting at, 6:35.
I say that there's support, supported by Rosie. Any discussion or?
I got a vote on two. We're gonna go talk back.
Oh, roll call.
Madam Chair.
Yes.
Trustee Richardson. Yes. Trustee Maxey.
Yes.
Yes, it is done. Oh, he has done.
Oh, my goodness.
Praise the Lord. Let this song.